Hello, everyone. Welcome to Market Insight for the week of August 12th through the 16th. Do a brief market insight this week. Still recovering from eye surgery, but it went well, and I'm doing well. Just had a little bit of swelling last week. I'll be checking with the surgeon this week. In any event, let's get to the markets. So monthly shows a little bit of buying coming in right after a pretty good sell-off. Note we're coming up though towards last month's low right in here. And that's a pocket area, right, for the monthly. And that level is 54.32.5. And we're going to talk about that. This is going to be an important level this week. So we'll discuss that. And as I say, it's also a small pocket area on the monthly. So should be some resistance there. Let's take a look at the weekly. The weekly had a key reversal, or I guess what do they call that? A hammer in Japanese candle speak. In any event, we came down into the weekly pocket area in here and modest support. I actually didn't think it was going to hold. I thought we were going to come back down to retest the April lows down in here, but that didn't happen. Or I thought we could come down there. In any event, this week looks like it was testing that high volume that occurred on that heavy week in mid-April, that heavy down week. We came into that area. That's a little bit optimistic, isn't it? We came into the upper third of it, really. Yeah, that looks better, right? And didn't really drag out any supply. In any event, buyers came in, and they come in with good volume here. Buyers are basically attempting to wrest control from the sellers. Okay, let's take a look at how they were doing that. And by going to the daily chart, let me erase all of this. All right, so here we are on the daily chart. Monday, that's this day right here, was a huge day down, right? And it was following the break of significant support. Oh, there's that 54.32 level, right in there. So broke that support on the prior Friday. That's here, and then Monday continued. This was the largest down day that we've had in nearly 2 years. I think it goes back to September of 2022. So 1 month shy, 2 years. And these 3 days together, it started here on Thursday, and then Friday and Monday of this week. These 3 days together represent kind of like the largest selling wave down since the COVID crash, right? So pretty big selling in here on Monday. And that was triggered. Let's go back here now a second. That was triggered, go back a couple of, by the monthly narrow range clustered close on very high volume that ended the month, right? And so this is a monthly chart, and of course I don't have the supply line here because it started to get meaningless up in this area, but we were way overbought in the trend channel. If we had, you could sort of see the trend channel here would be roughly there. So we were way overbought in there, had all the characteristics that we were going to have a pullback, a monthly level pullback on the monthly chart, right? And so that's what this looks like on the daily. right? And this is what we expect the daily to do once we're set up for that monthly reaction. It's not the beginning of a recession, and it's not, oh God, the economy's falling apart on us and blah, blah, blah. All the nonsense that we hear from the pundits and the news folks, whether it's on, MSNBC or Fox News, whatever it is, they don't know, right? No one is saying, oh yeah, it was the monthly chart and we had, clustered closes, heavy volume, effort versus result, and narrow range. They don't tell us that, right? They tell us all kinds of other stuff. All right. So that heavy selling over multiple days came to an end on Monday, right? After we flushed this sort of modest support here at 5,200, 5,205, but I would consider it to be the round number of 5,200. The market started to recover, putting in the 5120 low, but able to recover back up and closing above the 5205 support, right? And you can see that here's the demand line on the trend channel, the red line, right? And then the supply lines here. And that this trend channel, we got way oversold in the trend channel here. And so while the heavy selling ended Monday, that 3-day drop was really volatile, right? We put in 480 some odd points between this level and this level in 3 days. Wow, that's quite a lot, right? That's quite a lot. Well, and that volatility doesn't just end, right? On Monday here. And this is something to note. Volatility is cyclical. Markets continuously go from range contraction to range expansion, or and volatility dies out on the contraction and then expands on the expansion, right? So what do I mean by that? Well, volatility gets low down in here because everything's contracted. We're in a tight range. Then it expands up until this point. Then volatility drops off. Then it expands, right? Drops off again, and then it gets really large. Well, we can see that, right? There are indicators that show this, but we can see it without any of that. We go from range expansion to range contraction. It's a continuous cycling of contraction to expansion. This is one of the things that Toby Crable pointed out for us, right? Well, one day doesn't end this heavy volatility, and we see volatility continue throughout the week, really until Friday. Tuesday, now painted a blue, or it's actually cyan, colored bar. Now that represents both an inside day, right, inside the range of the prior day, which it was, and a narrow range 4-day. In other words, the narrowest range of the last 4 days. And it is, right? And yet, even though Tuesday was an inside day and was the narrowest range of the last 4 days, it still had traveled over 120 points from high to low, okay? That's volatility continuing to be sustained. Right? So note this, it doesn't just go away in 1 or 2 days. In fact, Wednesday, right, buyers tried to push price up and go higher, but couldn't hold over the highs of Monday and Tuesday here, right? They fail in here. And so we get a down day. And it ended right around Monday's close and Tuesday's low. Now note how the volume contracted in here on this, right? And yet still we had a range of 163 points on that day. Again, very volatile, okay? So, and this volatility is something we would like to have, right, in the market, because it's really hard to trade in narrow range days. We know that. Also hard to trade on really volatile days, but that's where you can, that's where you can make up a lot of money and a lot of points. The volatility is our friend, not our enemy, when we know how to trade it. So Thursday has even a larger range, about 180 points, almost 200 points in a day, my goodness. And this pushes price back up to the highs of the last 3 days. Now note the low volume. Oh my goodness, right? It's volume less than the prior two. So, that's kind of our rule of one of our criteria for no demand. Well, is this no demand? I mean, the market is in this range and it's got low volume, less than the prior 2 days. So is this no demand? Absolutely not. Let's be clear about this. This is not no demand. In fact, it's very bullish. We see very heavy supply coming into in this market, and the market then holds for 3 days. Then on Thursday, we dip underneath both Tuesday and Wednesday's lows, right? Find no supply down there. The volume was very low at that point. And then it was strong enough to push up and so it's strong enough to push down below there and down below the 5202 support level on Thursday, but then the sellers fizzle out, right? They bring it down, but then they can't bring it down any farther. Buyers see that, and that allowed the buyers to come in. And they come in because there's no more selling down in this area. The selling's been dried up. We don't need a big effort to rally the market, right? They were able to rally the market and bring it to a close for the first time above Monday and Tuesday's highs, right? Particularly Monday's high. That's the key thing here. We're able to close above it, and it didn't take much effort to do that. So this is not no demand. It actually reflects a lack of supply. Think about it. If there was supply there and the buyers were, getting in control here, but yet there was still supply, they would have to eat through that supply. They'd have to deal with it. And that would cause more buying. We'd see probably more volume in here, right? Because there would be more supply. The fact that there was relatively or comparatively little selling going on, it allowed the buyers to push prices up on light volume. And so this is quite bullish, right? Now, Friday, we break the supply line, and here, this downtrend line, and close above it and close above all the highs of the week. So although the volume is light here and the range narrowed down, the pink or the magenta color represents a NR 6-day, a narrow range of the last 6 days. And that often, as you see here, you can see over here, and we get it again here, that narrow range days often when they're in the right setting, they often create volatility. It's kind of the end of volatility, and then the end of the low volatility and beginning of new heavy volatility. But so we would normally be thinking, all right, the market is vulnerable to a pullback, and it may pull back. I'm not saying it's not going to, but there's a lot of bullish behavior in the immediate background. So although we may pull back after a couple of days up, my bias or my lean here, if you will, is more bullish unless the market tells us differently early next week. And I'll explain, I'll tell you what I'd be looking for to tell us differently, right? And we'll come back around to talk about the coming week in a few moments. But first, let's take a quick look at the major markets here. And we see all three are quite bullish. In fact, the Dow didn't even get all the way down to its support level. It held above, very bullish. And the NAS is breaking its supply line. I don't have the supply line here on the S&Ps, but you saw on the daily chart of it that it was also breaking its supply line. So we could spend a little more time going back and forth in here, going sideways for a couple, but overall the markets are showing some strength, the Dow being the stronger, right? Now let's take a quick look at the point and figure charts here. No, that's not what I want, not the daily, the point and figure, there we go. So this is the 50 by 1 point and figure chart, and that's a nice little intermediate kind of point and figure time frame, if you will. And so on the 50 by 1, we've got enough cause here. There's 11 figures across that's 550 points. And we would add that to the low here of 5150, and that brings us up to 50, that should be 5,700. I made a mistake there, 57. So basically enough cause here to retest the highs, right? Now, that's nice, and that may happen, but notice the pocket, whoops. Notice the pocket here, right in here, the low being the 5450 level. We're really talking about again, that monthly low there. That's a significant level, and this may thwart the buying going up. And if it does, we could see more congestion in here, right? We could come back and forth a little bit. And actually, that's not such a bad thing. I'll be watching to see if this occurs, because it would actually be a plus for the market, I think. If we look on the next higher time frame up, it would make the structure a little bit more hang on a second. It would make this structure a little more robust than what it is, more like we have maybe around the lows down in here, rather than this is a little bit of a harder structure to really kind of identify as accumulation. It's just not as strong a structure, or not as clean a structure like we have around the lows of 2022. Also, building more structure here. Go to the next higher time frame on the point and figure. This is 100 by 1 box, and that would create enough structure maybe on the 50 to push us not up just to 5,600, but on up to 5,900 to 6,000, which is the higher target on this 100 point and figure chart. So in any event, go back to this here. In any event, so what I meant by this is that, you know, we would build out a little bit more structure. This would have a cleaner look to it, and also maybe then project up to 5,900 to 6,000. That's what I'm talking about here. Okay. So in any event, there's no real, one thing to note from the point and figure charts, both of them, there's no significant distribution going on in here. So all this talk about, oh my God, we're in a recession and blah, blah, blah. Don't, you know, just set that aside for now. So, all right, let's talk about a little bit about what we're anticipating for next week. And we'll go back to the daily chart here for that. So this level here, 54, I'm sorry, the level here, right along here, this is 53.38. There's just big support along that level. 53.38 to about 53.40, 53.42 in this zone area, right? This is the area. I'm going to be looking for this level to hold on any direct tests, or better if we get like a flush down to maybe around 53.25 and then a recovery of 53.38. That would potentially be a nice setup for a bullish run, and that would be quite, that would be the sort of the ideal buyer's scenario. We hold that third. If you look on a 15-minute chart, for example, you'll see this 53.38 area is just very strong. We're trading a lot of trading around there, and it's good support. So we may see that get hit, and then the first target would be 5,400, the round number, and then into this area here of important resistance, the 54.32 up to about 54, maybe 45 in here. All right. And you can see it's significant resistance with all the trading, and it's also where we broke down and supply really came in big time into the market. So that's going to be tough to overcome, right? And we'd likely stall in this area and then start to react back down. Now, above that, if we get really bullish and we're able to wipe out all of this selling, then above that, we just go up the levels. The first one is 55, 5,500, 5502. You can see lots of trading in here, and then that's the midpoint of this area in here. So a lot of trading in there as well. And then 5,600, and then all-time highs. So the levels are pretty clear, as they often are. But as we say, we do have this narrow range day, and we are vulnerable to a pullback, right? So let's take a look at the bearish side as well. So should the sellers be stronger than what I'm seeing, they'd start pushing down below Friday's low. Now, Friday's low was 53.19 and a half. So we could flush this, right, and then recover, and that would be bullish, and we'd be looking for higher prices back up, right? So in fact, that wouldn't surprise me to see that, to see some sort of a trading range develop, somewhere's around maybe 53.20, the low here, 53.19, and 53.85, the high. Maybe we spend a couple, 3 days in here before pushing up. And this would be a trading range of actually about 65 points. So not, it looks kind of tiny compared to everything else, but it's not all that small, right? So it could be a nice trading area if that does develop. Now, if we start trading below 53.19, sellers are going to see this, right? And they're going to try to push the market down. So then what would we be looking for then? I would say 52.50 would be one downside target. This is actually where we, on the intraday charts, we actually had a jump across the creek and began Thursday's rally up. So that's roughly the area. There was consolidation all in this area, and then we jumped that, and that on the intraday, and then that began the big move up on Thursday. So that would be an obvious spot for a test to occur, be kind of in the beginning of the vertical acceleration on the intraday charts up, and that would be a good spot for a test. So that would be one target to the downside if Friday's low breaks and we start trading down, that would be one thing that I'd be thinking about. If that breaks, then we've got, let's call it Thursday's low. And then beyond that is Monday's low. We know those levels, right? So 52.50, 51.82, and then 51.20, just the levels going down. All right, so that's what I see for the coming week. Let's take a look at what we've got going here for next week. We'll be back on normal schedule for deep practice. I had to take last week off because my eyes were swollen. I couldn't really see. But as I say, the surge, that's all kind of abated now. I'm going to see the surgeon early next week. He'll give me, I'm assuming he'll give me a clean bill of health, so to speak. And we should have no problem for Thursday, August 15th, our normal time. So enjoy the rest of the weekend. Have a great trading week next week, and I will see you on Thursday for deep practice. Thanks, everybody. I'll see you then. Bye-bye.